If you are buying a home or making a property investment, you may need to borrow money to fund the purchase. Banks and building societies typically arrange funding as long as the borrower is prepared to enter into an agreement to mortgage the property they are buying. A mortgage is the legal promise to repay the lender and involves creating a legal interest in the land. The lender secures their debt on the title of the property by registering a legal charge to ensure that the property can't be sold or transferred without the lender being notified, and discharging the legal charge after the debt is repaid. The terms of the loan will be decided by the lender. During the loan application process, the lender will assess the most suitable loan product for you, whether you can afford the monthly payments, whether your credit rating is acceptable to them, and whether there is sufficient value in the property to cover the amount of the loan should you default. The most common types of property loans are interest-only loans and repayment loans, where you make interest and capital repayments over a fixed term with the aim of repaying off the loan by the end of the term. You should speak to your independent financial advisor to ensure that you choose the correct type of loan product for your property purchase. Upon completion of a successful mortgage application, you will be issued with a mortgage offer that is usually valid for a fixed period of time. When the mortgage offer arrives, you must read it very carefully. Make sure you check the date the mortgage offer expires, as you need to make sure you can complete before this date, that the borrower's names and address details are correct, that the terms of the loan are as expected, and that you understand any early repayment penalties if you are intending to make overpayments or pay the loan off early. These are called redemption penalties. To avoid delays in the process, highlight any discrepancies with your lender and any advisor such as your lawyer or IFA as soon as possible. The paperwork must be error-free on the day of completion. Any special conditions must be reviewed with your advisor. Lenders sometimes impose a retention, which means they hold back some or all of the loan monies until a certain condition has been met. For example, the survey may specify some remedial work required to make the house worth the valuation. The lender may hold back some of the loan until this work is complete, which means not all the money you need to complete will arrive on the agreed completion date. If this is the case, you will need to make up the difference from other funds to complete the purchase. Once the loan conditions are understood, your lawyer will investigate the legal title to the property on your behalf and on behalf of the lender to ensure that the property provides good security for the loan, and will execute the legal charge, also known as a mortgage deed. If everything is in order, the lawyer will issue a certificate of title to your lender. The certificate of title signals that the funds can be requested from the lender in time for completion, typically to arrive the day before your completion date to avoid funding delays on the day you move. Don't forget to make sure you understand the completion statement so you have the full picture on how your purchase is going to be funded on completion day. The team at IBB Law are experts in supporting you through the property buying process. We make sure the key issues are identified and managed to make the process as smooth as possible. We aim to give you everything you need so that you can make the right decisions along the way. Don't leave the biggest investment of your life to chance.